when you're deploying a GPU, you still call it Hopper H100, but so you guys know when Zuck calls it H100, his data center of H100s, there's like, I think you're coming up on 600,000, and
we're good customers.
Meta just released their latest quarterly figures, and guess what? Yet again, a flawless quarter, perfect execution by Zuck and the team. And so at the time of making this video, the stock is up between 6 to 7% or so. The market cap of over $1.2 trillion. Stock is up over 35% year to date, over 50% year over year. And despite all of that, we are still at just a forward PE of 22.7 times, EV to EBITDA 12.3 times, price to sales 7.4 times, price to free cash flow right now, last 12 months, that will change a little bit, 24.3 times, with price earnings to growth at just 1.14. So yes, if you're just looking at, oh, a stock has increased a lot this year or the past year, and it must be expensive, then you're probably going to miss out on some stuff, right? Like I've said, I've missed out, made a mistake with NVIDIA. NVIDIA was up a lot, did not expect it to continue to grow that much. And despite NVIDIA being up a lot, valuation-wise at the start of the year was still quite okay, but at least I did not miss the recovery from Meta. So again, Meta, just like Alphabet, despite being up a lot this year, just look at the business. The business is doing extremely well. This is why you get here a forward PE of just 22.7 times for a company that is growing like Meta, profitability standpoint as well, buybacks shares, small dividend yield, 0.42%, but I highly doubt anybody is buying Meta for the dividend. Now, let's go and have a look at the quarter and a couple of things that were mentioned during the earnings call. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description. And in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with a comment here from Mark Zuckerberg. We had a strong quarter and Meta AI is on track to be the most used AI assistant in the world by the end of the year. We've released the first frontier level open source AI model. We continue to see good traction with our Ray-Ban Meta AI glasses. We also heard some good commentary on that from Qualcomm. Of course, they're working together. I highly suggest you go try them out. And we're driving good growth across our apps. And look at those numbers. Revenue increased 22% year over year. Cost and expenses only increased 7%. Income from operation increased 58% year over year. Operating margin 38%. Net income increased 73%, and so did diluted earnings per share. And as you can see from Consensus Gurus here, a beat across the board, two small misses, one from Reality Labs, okay, not such a big deal, and the other one from free cash flow, a miss by around 8.8%, but they still delivered $10.89 billion worth of free cash flow this quarter. All the rest, a beat for the quarter and for guidance. Now, just to show you that even though they are reaching sizes not seen, well, ever, for example, family daily active people, 3.27 billion on average for June 2024. That's an increase still of 7% year over year. I mean, that's crazy. When it reached 3 billion, people were already saying, it's not going to grow anymore. But guess what? They are still growing somehow. Ad impressions delivered across family of apps increased 10% year over year. Average price per ad also increased 10% year over year. With regards to the capital return program, share repurchases were $6.32 billion and dividend payments were $1.27 billion. As for guidance, they expect the third quarter total revenue to be in the range of $38.5 to $41 billion. As for the full year, total expenses to be in the range of $96 to $99 billion, unchanged from their prior outlook. For Reality Labs, they continue to expect 2024 operating losses to increase meaningfully year over year due to their ongoing product development efforts and investment to further scale their ecosystem. And then, while they're not giving us guidance just yet for 2025, they say here they expect infrastructure costs will be a significant driver of expense growth next year as they recognize depreciation and operating costs associated with their expanded infrastructure footprint. They also said something about Llama 4 and how much compute they will need for that, much more than Llama 3. So of course, great news for NVIDIA investors. We anticipate our full year 2024 capital expenditures will be in the range of $37 to $40 billion, updated from their prior range of $35.40 billion. Now, to be honest, if they would have announced this, let's say, a year ago, maybe not even a year ago, 2-3 quarters ago, I think the market would have reacted a bit more negatively, saying that expenses are going to go up, saying that their investment in AI is going to go up, etc., etc. I think back then, investors, the stock market would not have gotten the same vibes, the same message across the board, even though nothing changed, right? They're investing because they think it's needed. But the sentiment around Meta has changed. Now the market feels, you know what? Go spend, go build out all that infrastructure. We understand why you have to do it. We don't care if in the short term the bottom line gets hit a little bit. We think it's the right thing to do. To be honest, it is the right thing to do because Meta right now is not like Meta before. They learned their lesson. They're not going to rely on others. They decided they want to be king again. Now, I want to show you one quick thing here. Revenue by user geography, doesn't really matter. Revenue as a whole here, Q2 2022 to Q2 2024 increased 35%. Okay? Revenue increased 35% during all that period. Expenses as a percentage of revenue, as you can clearly see, has come down. Number of employees from 2022 to today has come down by 19%. So this is what happens when you become a lean, mean machine like Meta. You can grow revenue, you can become more and more profitable, all of that while requiring less employees. We're going to see this across all the tech sector. It's sad for the people that got laid off, but it's great for us investors, to be honest, because, you're getting companies that are growing and become more and more profitable, which goes back to my point I made in the Sunday video with Tom Lee. Well, Tom Lee didn't come on the channel, not yet anyways, but we talked about the fact that, yes, investing in big tech still makes a lot of sense because these companies can continue to grow, can become bigger, more profitable while requiring less manpower. He talks about $4 trillion, I believe it's $4 trillion in wages that will have to go to companies, not have, but will eventually go to companies and not to people. Why is that? Because, they just got replaced. That's just the sad reality, to be honest. Then, looking at the couple of segments here, of course, advertising still the biggest. Reality Labs revenue, not much, but Reality Labs losses, quite a lot. $4.48 billion. Will they ever recover that amount? God knows. I don't know. Free cash flow for the quarter, as we've seen, is lower than Q1, but Q2 is usually a low quarter. Then we see some acceleration in Q3 and Q4, but for this quarter, $10.89 billion. Now, during the call, he mentioned a couple of extra things. The WhatsApp one here, he did say that WhatsApp is doing quite well in the United States. So this was a previous thing he shared. WhatsApp crossed 100 million US monthly active users. AI on track, Meta AI on track to be the most used Gen AI assistant by end of year. India is the number one market for Meta AI so far. More than 1 billion people with glasses worldwide. And he thinks that eventually they will all switch to smart glasses if those are available. Let's be honest, why wouldn't they? And there was a question with regards to Llama and open sourcing. So still no plans to build out the cloud. Llama is open source for good reason. Basically helps other companies, semiconductor companies, hospitals, other companies, you name it. All of them can use it. They can help build the ecosystem, which in turn, of course, will help Meta AI and future Meta products. Because Meta, let's be honest, and other companies as well, cannot do it all alone. Imagine if it was closed source. Imagine how slow Meta would be able to advance when it comes to, let's say, build out the metaverse or future augmented reality glasses, mixed reality headsets, you name it. Now, making it open source, you've got huge companies using it, you've got smaller players using it, everybody's building thanks to that. The ecosystem becomes bigger and bigger, and things are moving way, way quicker. So that's basically the whole thing here. Monetizing generative AI will probably come from a Meta's product. Right now, it's just through advertising, but in the future, WhatsApp is already getting monetized a little bit, but I think the future monetization opportunities are going to be huge. And then with other services as well, AI agents building out stuff like that, advertising, AI studio, which they've also shown during the presentation with Jensen. To be honest, I'm quite impressed. Maybe I'll do a separate video about that. But overall, I mean, the future is quite bright here. Meta 2 years ago was really left to die, let's say. TikTok, Apple, privacy stuff, metaverse build out did not work out quite well. And since then, a lot has changed. Zuck has a couple of gold chains, curly hair, and Meta is worth more than $1 trillion. Quite the turnaround. And so right now what we're seeing after a couple of weeks of the stock coming down a little bit, we have now a jump back over the 20 and the 50-day moving average, currently sitting at $507 after hours. The 200-day moving average sits at $434. Will we ever see that number again? I highly doubt it, but if we do, then I will probably buy back even more shares. I bought a couple of shares last week, should have bought more, but then again, I didn't have a crystal ball, and let's be honest, I'm quite happy with what has happened. So that's about it. That's all I've got for today. Good report for Meta. I mean, quite an excellent report, let's be honest. Also some good news for NVIDIA shareholders, because it basically means that these types of companies will continue to spend billions and billions on NVIDIA chips, and NVIDIA will just continue to grow, because NVIDIA, let's be honest, started as a hardware company, switched to also a software company, I think much quicker than what Apple has done from devices to App Store and services. NVIDIA has made that switch much quicker. So definitely don't sleep on the fact that NVIDIA can become a huge software play, thanks to CUDA. Anyways, that's all I've got for you today. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.